Meanwhile, we're also talking about commercial spaces. The net leasing of commercial office spaces has grown. It's grown 10 to 15% if you look at it on a year-on-year basis across 2022-23, and this across the top 6 cities of India. It's driven by the return to office, and this as the impact of COVID-19 is now gradually waning. It's increased hiring in key sectors that we've noticed, and of course, the expectation of a healthy economic growth going ahead. It will, however, of course, stay below the pre-pandemic run rate, at least as of now, and this on continuing caution amidst hybrid work models. It's something that is getting reflected in this latest report that is put out by CRISIL Ratings. Also, nearly 75% of commercial real estate occupiers in India are now considering a hybrid working model. So it's not all about returning to the workspace, to offices, but there is a hybrid model that is currently underway, and that changes the scenario too in many ways. 78% occupiers, we understand, they prioritize the health of employees and their wellness. These are the most important aspects, and they're trying to facilitate the return to office to enhance employee productivity. And it's showing, all of these factors are showing in another report we've been poring over, this time from CBRE. So let's try and understand the upswing that we are seeing in commercial real estate and the biggest realty trends that are building up there. To speak about this, let's connect with Abhinav Joshi. He's the head of research, India, Middle East and North Africa with CBRE. And Aniket Dani, director at CRISIL Research, is also joining us on the show on India Development Debate. Great to have you with us, gentlemen. Abhinav, first to you. Tell us what has changed in the office leasing universe because of the pandemic, because you're talking about these hybrid working arrangements, which are clearly changing the landscape. Tell us how.
So hybrid working is finding greater acceptability, compared to pre-COVID, where, there was a lot of focus on in-office collaboration and a larger focus on having very dedicated seating. What we're seeing is that there is a greater element of flexibility. There is greater acceptability of hybrid and remote working, at least if we compare to not just pre-pandemic, but if we compare even with 2021, the sense that we're getting from corporate occupiers is that this is what employees are really asking for. But it's not a big threat to office demand. That was the big question that most of the stakeholders had for the last at least 2 to 3 years. It's not emerging as a big threat, and that's because, when it comes to hybrid working, the most popular option is, you're there in the office for 3 days or 4 days, and for rest of it, you offer the employees, remote working option. So, or it's a balance between working in the office or working remotely. That's what we are sensing, that greater acceptability of hybrid working, but not a big impact on office demand. And at the same time, return to offices has picked up, especially from March 2022 onwards. Post the Omicron third wave, we've seen across cities, across sectors, slowly and gradually, there is an improvement in entry into the physical office environment. And as per our report, as per our survey, at least in the first 6 months of the year, more than 50% of the respondents to our survey said that they'd already come back. And by the end of the year, 85% of the respondents will be back. So it's picking up. And we're seeing that impact on office leasing also. While our numbers are not yet out from CBRE, for the second quarter, we're sensing that we're sitting at an all-time peak in terms of quarterly office leasing. And that's largely on the basis of pent-up demand. There are several pre-commitments. There are RFPs worth millions of square feet that are floating around in several cities like Bangalore, Hyderabad, Chennai, Delhi NCR, Pune, and Mumbai. And at the end of the day, hybrid working is also finding acceptance. It's part of the entire return to office, setup that corporate occupiers are experimenting with.
This across to Aniket from the report that CRISIL has put out. How much of this hybrid working culture is getting reflected in the kind of occupancy that you're seeing within commercial hubs in the country? How has that changed? Are people preferring to return to office, or are we seeing this hybrid culture really taking root?
No, I think the hybrid culture is going to stay. And all corporates are looking at hybrid culture because of 3 reasons. One is, cost savings that they would have. then if you are looking at hybrid culture, the overall demand for commercial real estate, of course, is going to be lower. So what our estimate is that in FY23, the growth in net leasing is expected to be 10 to 15%, and about 23 to 28 million square feet of net leasing will happen. Even after this 10 to 15% growth, the number of net leasing, which is 23 to 28%, will be far lower than the pre-pandemic level of 35 to 40 million square feet of net leasing that has happened.
Also, I understand from the report that I've been looking at, Abhinav, is that wellness is emerging as a big theme. How is that getting reflected? Because employee wellness is going to be at the center of things, at least for some time, since we live in a pandemic-ridden world. When we want people to return to office, you'd have to give them a safe and an environment that offers health and prioritizes it in a way. In the choices of commercial spaces and how they're designed, are you seeing that shift reflect?
Yes, absolutely. And this is a discussion that was happening pre-pandemic as well, but it's just picked up pace in the last 3 years. There's a lot of focus on employee wellness, not just from a COVID-19 protocol perspective or safety and social distancing perspective. I think it's more from the perspective of providing cleaner air. So most of the landlords across assets, when they were lying vacant in the last 2 years, have focused on, for example, implementing air quality sensors, which really test how clean your air is, because, given the nature of the crisis we've been facing in the last 2.5 years, that's a very important priority. There is allocation for gymnasium, fitness rooms, mental health session, etc. It's a big focus. More than 80% of the respondents we interviewed in our report said that, yes, health and well-being is going to be a big focus, because they want to offer an entire experience to their employees when they come back. When they're inviting their employees back into the office environment, and they're trying to justify why it is important to work for a couple of days out of offices, basis different flexible workplace setups. So they're trying to offer them that holistic experience and wellness, sustainability, offering them, a tech-enhanced workplace with touchless technologies, latest facilities, etc. I think all of that is part of that parcel.
And Aniket, when you look at the top 6 cities which you have in your report, and those include Bengaluru, Hyderabad, and Pune, which are the sectors that you see the maximum demand-supply situation, the variance from pre-pandemic levels to what we are seeing now actually play out? Where is it most obvious, sectorally speaking?
So if you look at the sectors that drive commercial demand, the share of IT, ITes is about 35 to 40%, and BFSI is about 15 to 20%, which means these two sectors contribute to anywhere between 50 to 60% of the overall demand. So these are the sectors which we expect to recover going forward and drive demand. So cities where IT, ITes mainly is focused on, like Bengaluru, Hyderabad, which have more than 45% share being taken by IT, ITes. These are the two cities that will lead growth going forward. And when we say pan-India net leasing will grow by 10 to 15%, for these two cities, the net leasing could grow by more than 15 to 20%.
Abhinav,
and also what we have
yes,
seen is that in terms of corporates also, if you look at we have analyzed 670 plus corporates. And what we have seen is that for these corporates, the revenue level is today 128% of what it was during pre-pandemic level. So even the corporates other than IT, ITes or BFSI, those are also seeing good signs of recovery. So an overall demand is expected to come in for the commercial office space.
So when you talk about the qualitative differences, Abhinav, in what these different sectors are looking for, at least when you talk about some of these six leading cities of the country, when it comes to activity-based working or targeted mobility, where does the difference really show up?
Well, it's across the board, I would say. That's the sense that we're getting, not just from our present report, but from several interactions we've had with corporate occupiers, that the appetite for dedicated seating is going down. I'll just give you a number that pre-COVID, around 85 to 90% of the corporates we to say that we'll have assigned seating, dedicated seating. That's the way forward, very rigid structure. That figure has gone down to just about 40-45%. So less than half of the employees are saying, half of the respondents, are saying that, we are focusing on dedicated seating. And in the next 2 years, that figure will go down to just about 10 to 12% of the corporates. Rest of them are going to focus on either activity-based working, which offers you, multiple work settings in the same work office environment, or targeted mobility, where different business lines can decide this is the nature of their work and requirement, the kind of seating they have. So this flexible seating and flexible workplace setting culture is really picking up, and that's across the board, especially in the technology sector.
Also, we've seen the start of so many new businesses all through the pandemic. The spirit of entrepreneurship has taken root across the country. How is that getting reflected in the kind of choices in commercial spaces? Because the shared working spaces perhaps are getting that much of a demand. Is that getting reflected in your report, Aniket?
Yes, definitely. So what we have seen is that 70% of the workforce is expected to be in office on a rotation basis, and that will be mainly for the large players. But for the small and medium players who want to benefit or look at cost savings, given that funding is starting to dry up for startups, so co-working is a big thing which can help them save costs. So we are seeing that trend happening towards co-working. And till the funding comes back, we feel that core working will be the way to go for startups as well as small and medium enterprises.
Is that something that you've noticed? Because these co-working spaces have come up in number. How is that showing up, Abhinav, in the report that you've put out, and where is the maximum demand coming in? Is it outside the key cities? Where exactly is it working? For what kind of companies?
You see, the larger trend post-pandemic in the office leasing setup has been on flexibility. And that's where co-working players really come in. Even now, there are several corporate occupiers who are not sure about their hiring or business projections, or, as Aniket said, they don't want to take a call on spending those capex or, cost on fit outs. So they're really dependent on these co-working or flex space operators, as we call them. We're offering them a lot of customized solutions. So you can be there for a day, for 2 days, for a week. You can take that space for a month, 6 months. You can customize it entirely as per your requirement in terms of technology, in terms of look and feel, in terms of lock-ins. And that's really appealing to corporate occupiers, not just startups, but several mid to large size firms. In fact, core plus flexi leasing strategy, which basically means that you lease some space in conventional office spaces and some space in flexible spaces. That's really picked up. It's on the table for almost every corporate out there. That's the sense we are getting across all the 7 cities, but it's also percolating to tier 2 cities, tier 3 cities. We did a survey for flex space operators last year. And in terms of their pipeline, almost all the leading players said that, look, we are going to be expanding in all the major tier 2 and tier 3 cities, because there is a fair amount of demand, from sectors like, for example, information technology, where, a large part of their talent pool is still sitting in those smaller cities, so they need those touch points, to really experience that work environment, when they can't come back to the conventional office setup right now. So it's really picking up. Tier 1 cities definitely dominate, but there is, increasing demand in tier 2 markets as well.
And what about pricing for the kind of leases and the average leases that are going out, Aniket? What's the variance that you've seen over there? Again, comparing it to pre-pandemic to now, is the size of the leases, the duration changing? And in terms of what people are willing to pay for these leases, has that changed dramatically?
Based on our analysis, what we have seen is that the vacancy levels were very high in FY22, about 16 to 16.5%. Going forward over the next 2 years, we feel that the vacancy levels should start coming down and reach anywhere about 13 to 14% in FY24. That will mean that with occupancy levels increasing, the leasing rates will tend to go up. Our expectation is that lease rentals would increase by anywhere between 2 to 3% over the next 2 years. that is 2 to 3% every year over the next 2 years. And this will be only marginally higher than the leasing rates that were there pre-pandemic. Because if you look at during pandemic in FY21, our estimate is that the lease rentals had gone down by anywhere between 3 to 5%. So it is just the recovery that is happening, and we will be only marginally above the pre-pandemic levels.
This gives us a lot of perspective on what's happening within the commercial realty universe. Abhinav Joshi joining us from CBRE and Aniket Dani from CRISIL with the kind of reports both these organizations have put out. It does add a lot of color to the changes that we are seeing, the nature of the changes, both qualitatively and quantitatively. Thank you both for joining us on India Development Debate. Of course, we'll take a very quick breather on the show. We'll be back right after. So much to discuss. Don't go away.